I'm so excited to have Kimberly Davis talking to me via Zoom today. Kimberly Davis was introduced to me kind of through a mutual friend, and I was stalking her on Instagram because I loved her platform she has called The Fiscal Feminist. So she was nice enough to meet me for drinks quite a few months back, and we've become friends. And I just thought I would check in and have her tell us what she's seeing in the market. You're a managing director, right? You have a big title.
Uh, well,
Yes.
maybe. I'm Kimberly Davis. I am a managing director and partner in a wealth management group called the Bahnsen Group, which
Yep.
is located in Newport Beach, California, and we also have offices in New York City.
Yep. And I love even in these where a lot of people have had financial uncertainty. Can you kind of tell us a little bit about how you got into this business? And because I love your story.
Yeah, so I have had several different careers throughout my life, so it's not been a linear trajectory. I was originally way back in 1983. I started practicing law as a young law graduate. So I got a job on Wall Street, and I was a corporate securities lawyer. So I did that for many years, and so that is kind of my connection to the capital markets. I was primarily a lawyer for underwriters, so we did big deals like stock and bond offerings, IPOs, and things like that. And then from there, I transitioned into the business world and became an investment banker. And then I got married to my husband, ex-husband, who was in private equity, and had my 3 children. So that's kind of the beginning of my career. And then we moved to London, and I lived there for about 14 years. And my children essentially grew up there. And, at that point, I had to kind of be in charge of the children acclimating to a new country. And my ex-husband, who was at JP Morgan at the time, became the primary breadwinner because I stopped working and stayed home with the children for a bit. And then I had a fashion business in London for a while where I created a line of clothing, and that line was sold at Saks Fifth Avenue, but kind of realized that as much as I love clothes and everything, the actual business aspect of that business was
Yes.
outside my general. I didn't enjoy it. Anyway, so I came to California about 10 years ago, and I was in the middle of a divorce after 20 some years. My eldest daughter was going to Georgetown. The 2 other girls came with me here to Newport Beach. And I went through this really terrible divorce. So I had some bad luck in that divorce. The first decree was good, and then my ex-husband did some things that made him not adhere to what the decree said. So I wasn't getting paid what I should be. And even though we were still kind of in transition, I thought I have to go back to work now because I need to support my family. These cases are dragging on. We had multiple cases, and they took a long, long time. So I went back to my roots, and I went to Morgan Stanley, where I got a job, thankfully, as a wealth manager. And I worked there for a while, and then I joined the Bahnsen Group, which at the time was a group at Morgan Stanley. And I was like I became their financial planning director. And then I was also an advisor, but I did a lot of financial planning. I did all the financial planning for the group at the beginning. And then the Bahnsen Group, left Morgan Stanley in 2015 to become an independent advisory group. And that's at that point, I continued doing the financial planning, but my personal book of business continued to grow, and I got a lot more clients. And then I became a managing partner, and then I became a managing director. And so that's kind of how I came into the realm of wealth management. I mean, when I was trying to determine like what my next move should be, I was thinking, okay, what am I good at? What do I like? And I've always liked the capital markets. I spent a lot of time involved in that. And I like it. It comes easy to me. I'm a math person. And then I thought, where can I interface with people, real people? I was always on the institutional side in my other careers in the capital markets. So this allowed me to be in the retail space, where I'm dealing with individuals and their lives, and I prefer that. So it's been a great career. I have learned an immense amount about people and their money, about women and their money.
Yep.
And I also then evolved whilst, at the Bonson Group. I got my CDFA, which is a designation for being able to be an analyst for divorce kind of economics, so to speak, when people are getting divorced. And I talked to a lot of women in transition. So that's how the whole fiscal feminist thing kind of popped up. I look at my millennial daughters, one of whom is now a lawyer in New York City, just like I was many moons ago. I look at a lot of women who don't expect certain things to happen, like divorce, or they become a widow suddenly, or professional women who choose never to get married and, are then they're captain of their own ship. Women live longer than men, so they have longer periods of time in which they have to consider their long-term financial health. And basically, as time went on and after my divorce and the horrible things I had to go through, and, you'd think somebody like me would know, right, what's going on. But I had taken my eye off the ball. I was busy dealing with my children and, all of the things that go on with raising children, as you know. I was trying to build this business, and then I had the business, and so I was dealing with that. And it got to the point where I didn't really know what was going on with our own accounts, what accounts we even had. I wasn't even sure how much Michael made at one point, and that was my bad, because all of that really penalized me when I got divorced. I mean, I had moments in between these court cases and where he quit paying me, where I was paying for Georgetown and 2 Sage Hill tuitions, which is a private school in Newport Beach. And I was trying to keep all the balls in the air, and I was just like running out of money. And it was scary. So all of those things together, my life, looking at other people's lives, listening to the stories, led me to put together this Fiscal Feminist platform, which is really a platform to raise awareness with women about what they need to do and how they need to take control of their lives. You can still be married, but doesn't give you an excuse not to know about the money in the marriage. Or even if, getting married is not a financial plan.
Yeah.
That should not be your financial plan.
Yes. Which is why I love
that plan could go very badly for you.
And I love your message, because that really yes. I mean, for much of my life, I was raised by a single mom, and she, struggled a lot. And I think that's why I've always been working. That's never not been an option to not be involved in work and make my own money in my marriage. So I love that. And I love your whole story.
And I think the conversations, I'm writing a book right now, and I'm starting to get a lot more clarity on what I want this book to say. But one of the things I think is really, as I'm pondering all this, is that the conversations that we have with our spouses, with our partners, whatever our gender preferences, with our daughters. And I would like to come up with something that we can share with our daughters at a young age about how to think about money and what money really means. Because we as women don't tend to want to talk about money so much. It's not, and we aren't, I think money is a very masculinized topic, for lack of a better word for it. We associate, when you look at the bull on Wall Street, it's a bull.
Yeah.
You hear people talking, and I know in my job, people talk about, killing it, and there's sports analogies. So it's a very male dominated topic that women have kind of stepped aside from or been left out of, because the historical narrative is never to really include us in that, because, in the 70s, we still weren't able to get a credit card on our own. So we needed a male signature. So, I think there's so many things that we could do to improve our situation. And as you know, I mean, I post about this all the time. I mean, women now are, like 40% of breadwinners are women, whether, and primary breadwinners, whether they're in a partnership or they're single households, or, they make up about 39%, I think, of it's, sole business owners, small business owners, and they're 2/3 of the service sector. So there are more and more women working, but a lot of them are still making less than their male counterparts. And many of them are also making minimum wage, because they're in these kind of, lower income type scenarios. So these are the women also I want to reach, because it's important that each person, because money is power. If you don't have control over your money, whether you control, you need to know about it, because otherwise someone can control you through that. And that's where, there is such a thing as financial abuse. And it doesn't even have to be overt. It can be that you stay longer in a relationship that you shouldn't be in because you are very afraid of how you're going to extricate yourself financially. Will you be able to survive? And so it is literally a lifeline to giving you a little bit of power and independence in your life. And I hate to, it's a shame that often it comes down to the money question, but it does. And so we have to embrace that.
Yeah. Oh my gosh, such powerful words, and yeah, such great information. So what are you seeing with in the markets in general, right? I mean, we were at what, 27 something, and then dropped to 17. And then last time I checked, we're at 24 when talking about, the Dow. But when people and especially women, looking at their portfolios, like I was just talking to one of my great girlfriends who's not married, late 40s. And she was just talking about her 401k and what she's seen through all of this. What's some advice that you would give people kind of going through this, maybe a job loss or a furlough in general when looking?
Yeah, so there's a number of things. I did a webinar recently on personal finance management during a crisis. And if you want, I can even send you the PDF if you wanted to share it with anybody.
That's be great. So most of these are always on your Fiscal Feminist website or your Instagram,
yeah,
right?
It is actually on the Fiscal Feminist website, and it is on Instagram in one of the posts with the link. And we're getting the updated one this week. So basically, a couple of things. I'll address the market question first, and then I'll go on to the personal finance type thing that you're about your 401k.
And then we got to delve deep down into the PDF. I know that's always such great information you give.
Yeah. So the market, look, in the end of January, the market was about, they were looking for it to break 30,000, an all-time record. And then the COVID virus came out, and everyone got a little bit, frightened, obviously. Yep. And then the market took a dip. And then the first week in February, it went back up again because earnings came out and they kind of looked good, and people could almost overcome the COVID-19 thing because no one really understood the enormity of it yet. Mm-hmm. And then from there, obviously it was a downward spiral from there because of all the uncertainty having to do with COVID-19. As far as what we recommend, the things that we're thinking about at the Bonson Group and how we manage money, we are long-term strategy players. We do not believe in market timing. Mm-hmm. Obviously, many people are going to say there are opportunities to buy stocks at depressed prices, so it could be a good time to come into the market. And, that is not inaccurate. However, I would say to people, this is, just having depressed prices doesn't necessarily justify going into the market unless you really understand what you're buying. And you want to always buy companies. That's what you're buying. You're not buying a stock price. So, yep. As far as the strategy that I'm telling my clients, because we have highly diversified portfolios. So if you have a diversified portfolio, which you should, which would be, a stock component, some sort of fixed income, and the fixed income realm is pretty tricky right now, but you do need to have some diversifiers in debt, and then uncorrelated investments, which we usually call in this business alternatives. So that would be something in the hedge fund world or private equity or a REIT if you need a liquid alternative. Okay. So you need to have like multiple things in a portfolio, because if if you're a 25-year-old person and 30 and you've got a long timeline and you've got a good job, you could be in almost a sole equity position because you've got time. But that is that's not what I would counsel most people. So if you came into this with a diversified portfolio and you were buying equities based on companies that are solid companies with good track records, long-term track records that make sense, we like to invest in the dividend growth space. So a company needs to pay a dividend, but it also needs to grow the dividend over time. So just paying a dividend isn't enough, right? So in the past few years, dividend paying stocks on the S&P dividend rate's only been about 1.9%. It's been pretty low. So we don't want those. We want stocks that are going to pay anywhere between like 2.75% up to 4% in dividend growth and dividend payments. So that's what we call the yield. But when we look at companies, we want to make sure they have enough cash flow to pay the dividend out of legitimate sources. They're not over leveraged and paying from, bad sources of money. They're not borrowing to do it, or they're not taking from their capital expenditures and so on and so forth. And the beauty of this strategy, especially for people who might live off their portfolio, is that it will create a stream of income off the top, right? The dividends pay you, and you don't have to deplete capital to take money out of the portfolio. So if you are a person who you live off your portfolio, maybe you're divorced, maybe you're retired, I don't know, there's so many scenarios, but you will not get a quote unquote pay cut during this time, because the price of the stock might go down, but the dividend did not. So that's the beauty of this kind of thing.
Yeah.
If you're not living off your dividend money, then the dividends are getting reinvested, and that's being reinvested at depressed prices because, the prices have gone down. So the reinvestment rate is going to be, you're going to get way more than you were before. And when the market goes up, which it will, you'll have a more of an exponential outsized gain.
Mm-hmm.
So what we're saying to our clients is, if you are at the beginning of this whole thing, a lot of what happened and why the fall was so precipitous was that there was a lot of forced selling. And that means a lot of people had margin calls. And so they had to sell. They had to pay the margin. And that, that coupled with, algorithmic trading and, this big momentum trading, all of those forces together caused a very precipitous drop. So that's kind of over. I think people have now paid off their margin calls and all that stuff. So now that bit's done.
A little bit more normalized.
Yeah. And I think, people are, a lot of what is going on in the market, they've already priced in all the bad news. Like everyone knows unemployment's going to go up or continue to go up for a little while until we get back to work again. So there's a couple of theories out there about how the recovery is going to occur. Some people say it's going to be a V shape, which means in Q3, everything's going to be good. And there's going to be this accelerated, normalcy, and everybody's going to go back to normal. And there's going to be a lot of activity. And so you're going to see, a precipitous move upward. I think we fall more into the maybe fourth quarter of the year, seeing a lot more recovery. First quarter, more of a U shape. Then some people say there's going to be an L shape, which means it's just going to be a prolonged recession. We're not in that camp.
You're in the camp
of the U, so like you might have recessionary outlook in the first 2 quarters of 2021, but I think generally by the fourth quarter, we're going to see, some improvement. Yes, GDP is going to be lower than it has been, but that's inescapable. And I think the market at least has kind of contemplated that. There's been a lot of fiscal policy, and there's been a lot of Fed intervention. And a lot of the stuff that the Fed does, we don't really understand or see as normal human beings in the world, but they have put in more liquidity into this economy than ever before in the history of the world. So, I think that, if you can stay the course in your strategy, if it was a solid strategy before this, and you were investing in companies that, were good, solid companies, and it will be a solid strategy. So we would say, don't liquidate and go to cash. That's what, fear is not a good place to make decisions from. And you will miss the uptick, and then it will be a permanent capital loss. It won't just be a paper loss.
Yeah.
If you see your prices go down one day and the next day they go up, I mean, that day it was down, it's all on paper, it's all theoretical unless you sell. So if someone comes to me and says, hey, I have no money and I have no liquidity and I'm not working and I need money to live, well, then that's a different conversation. We need to pick and choose what we're going to sell to make sure that this person has liquidity so that they can get through the next few months. So that's kind of it. Like we would never recommend that people start going in. Someone called me the other day who's not my client, said, I'm thinking about investing in this stock, and it's like a kind of a new company, and because the stock price was $3.50. And he said, yeah, well, if it was like 150 a year ago. And I'm like, okay, well, there's a lot of stuff that we need to unpack to understand this. But my recommendation is this, just because it's $3.50, it probably is worth $3.50. You don't know who their competitors are. You don't know, like how they've been affected by this, because, all these companies are having a hard time. We have to see their Q2 balance sheets, and they're not going to be good. So, if you have a financial advisor, obviously you should talk to that person and have a clear conversation with them about the different things. We are making changes within our portfolio, and they're very, they're optimal moves into things that we think are worthy and underpriced and make sense in this environment. But, nothing like trying to go in and out of the market, every other day to catch a win. So that's kind of the market side. Is there anything that I failed to address, or you'd like to?
No, I love it all. So
now on the personal side, I want to say to people, and one of the things I think that that PDF is good at is that, it really goes through all the fiscal thing, all the policies that have come out and what people are entitled to. So there's the subsidies, there's enhanced unemployment insurance, there's enhanced health care coverage, and then there's the extended tax filing dates. So if people, there's also some student loan payments have been stopped. You don't have to pay them until September 15th, and they're not incurring interest. So there's a number of things that are on offer. I know, unemployment insurance for unemployment for some people has been very difficult because they can't get through, and especially people in New York, it's been problematic. But you have to be persistent, because these are the things that are going to keep you afloat through this period. That for some people, if they are been laid off, they need the money. But for people who are trying to figure out where they're at, obviously it's not that different than in normal times. But I say to people, especially to people when I'm writing all this stuff on Instagram, like, this is the time now to look at your finances and say, how have I fared in this unprecedented time? How did I do? Did I come into this like with a ton of credit card debt and no emergency fund and no savings, and just kind of living from paycheck to paycheck? Because we've had a long bull market with long growth since 2009, and I think people don't remember, because we get comfortable, but things happen out of the blue. And that is why, if you didn't have an emergency fund and you have a ton of credit card debt, then you need to re-examine your strategy, because these things happen, and they happen maybe infrequently, but they do happen. But if you do have credit card debt right now, a lot of the companies are giving people breaks. They're giving them not forgiveness, but delay in payment. You should call the credit card company. I write about some of this in and they are helping people on individual cases based on their circumstances. If you need credit card counseling, there's the National Credit Group that will help you with that if you need extra advice. And all those resources are in that PDF. But you should be calling the utility companies and your car, your auto company, anybody that you can negotiate on to try to lower a payment or delay a payment. You should obviously try to pursue that to keep your cash balances alive if you're not making an income right now. Also,
such good information, Kim. Thank you.
Some people can go do their mortgage forbearance, if they can get that. It depends on the type of mortgage you have. So, there is that. And that doesn't mean it gets it's gone. It just means you got to pay it later. So I don't, those are a lot of things.
Yeah, exactly. Right.
Yeah, they should, because, and the renters as well, landlords can cut you a break, but you need to be proactive. You can't just sit back and let everything pile up, because it's better for your credit, because you also have to worry about your credit. People should be continuing to check their credit. If you have a conversation with your credit card company or your landlord or your mortgage company, then you're not going to get any kind of bad credit notifications, which will deteriorate your credit at this time, which you definitely don't want to happen.
No way, right?
Yeah, especially since there's an explanation, but it's up to each of us to take responsibility to call these companies, have a, sit down with our families and have a honest conversation about where we're at today. What does it look like for us today? For people who are still getting paychecks, that's fantastic. Then they're probably staying the course and watching Netflix and good. But if you have lost your job, or you maybe you haven't been able to get through to unemployment, and you don't have any unemployment payments because you haven't been able to get through, you might be in a cash crunch. So all these little things will add to lessen that burden and give you some room to breathe. But you have to do it, because no one's going to come up to your doorstep and say, well, you might get a check if you make under 75,000 or 150, but aside from that, not so much. So those are just some of the things that I think we should all be thinking about right now, for sure. We need to be taking this time to be introspective.
Yes. Now, I know you deal with a lot of high net worth clients, but if anybody felt that they looked you up and that you would be the right fit for them, are you taking new clients?
Yes, of course. I'm always taking new clients. Yes. I think it's important. Obviously, high net worth people have a whole other set of circumstances that they have to deal with. I do a lot of work with high net worth and ultra high net worth, and that involves tax planning, estate planning, and that's one thing. And then I do a lot of work with mere mortals that, have a good, they have some money, they're trying to make more money.
Yes, like moms, right?
Yeah, exactly.
People getting divorced, trying to rebuild their lives.
Yeah, and that's why I really started the Fiscal Feminist. It's not a mechanism particularly for me to find high net worth individuals. I can just do that through my referral business that I already have at the Baumson Group. It was really meant for me to help people who need help.
Yeah, Newport.
Yeah, exactly. So, help people who need help, or just women who just want some advice. I have a lot of clients who are divorcees, and I have a lot of clients who are professional women who didn't get married, and I have a lot of clients who are married, and I have a lot of men clients. But I particularly like helping women circumnavigate this space, because I think whether it's because our fathers, our teachers, nobody really talked to us about this stuff so much. And I think that's even still a real hole in the educational system, is that there's no finance courses for kids in junior high school or high school. My millennial daughters, I talk to them about checkbooks, and they look at me like I've got 5 heads. And I'm like, well, you can't pay everything online. Sometimes you've got to write a check to somebody, right?
Yes.
I don't know.
So
I think there's something there. And and also, I think a lot of women, not that everybody gets divorced, because they don't, but also women who are then going to get married again. There's a whole lot of things that people need to be considering the second time around. I'm getting married again, so
I know. Congratulations.
I'm not a man hater.
I've seen the ring.
Yeah, I don't have it on now because I'm in I'm in the sheltering, so I just forgot to put it on. But I think when they make some assets, they're going to get married again. How do they protect those assets? They've got to ring fence them. They've got to keep them safe. And so that's a whole discussion that needs to be had with them about how not to feel uncomfortable having a conversation like that with somebody, their next partner. It is okay to want to be financially sensible. You can still be a super wonderful partner, girlfriend, hot, sexy, all those things. It's not mutually exclusive. You can be those things and still be knowledgeable about your money and know how to protect yourself. Those things absolutely go together. So
you're the best, Kim. Thank you so much. I just want to thank you for your time, and I love your knowledge always.
Well, I love talking to you, and I love you know, you have all these great, I watch your posts and, you know, you have a thriving business. I mean, you know, just to turn it around on you, what are you thinking right now? How are things going in the real estate market, and what do you think is going to happen in the real estate market? Because
Yeah.
as I've been, you know, it took me a long time, it took me 10 years to get through my divorce. I can't even
Yeah.
believe it. So I was about to think about buying a house now. And
Yeah.
now I'm like, you know, so
Oh, I mean,
I want
I
to
have
know.
seen, yeah, so I have seen some incredible deals go across. So when this all first happened, we definitely had some knee-jerk reactions. A lot of people canceled escrows that we were involved in because they saw that drop in their portfolios and, you know,
Yeah.
were pretty panicked. In the weeks following, we we had some buyers put together some pretty amazing deals that I think that down the line, anybody is going to say, how did you get that house for that price? That was because that seller needed to sell that house and was also nervous about their situation. I think it's a combination. If we all get back to work, like you said, and it's a you, then, you know, prices I think will trend upwards again. I am of the thought that I do think we're going to have a little bit of some adjustment depending on how much inventory comes out, how many people get back to work, you know, how much lenders are going to work with people after this 6 months if they
I've had
don't
a
get back to
number
work.
of clients who were in the middle of getting mortgages, or were on
Yes.
the seller side, and they've had issues where they shouldn't ever, but we had to, you know,
Yes.
there was a certain additional paperwork, and then one of my clients was selling a house, and then the buyer walked away. And
Yeah, we had
fortunately,
3 people walk away that week.
yeah.
Yeah, and we've had a couple people not be able to get a mortgage because that kind of mortgage was, you know, when they pulled the non-QM mortgages. But I think a combination of low interest rates, and if you are financially secure, if you haven't lost your job, I mean, it's going to be over these next few months, probably never a better time to buy. I'm serious. I mean,
Can
there's
you
just,
actually show people houses? I mean, how are people looking at
there
houses?
was 10 days where we couldn't show. 10 days we weren't considered essential. And then now we are essential. So, I mean, I've got the mask, I've got medical gloves. Luckily, I have a client that's a dentist, so I'm able to get gloves. And so when people are, it's not the same gloves that I've been wearing all day. We have Clorox wipes that we wipe down all the surfaces. And basically, it's kind of like 2 at a time in the house, 6 feet apart. You're not touching any surface. And that's after you've already demonstrated that you've seen all the photos, the videos, and you're financially capable to see the house.
So it's not just
Yeah,
look-see kind of thing. It's
that you're not a looky-loo. Yeah. And there's no open houses or anything like that anymore. I mean, it's definitely a little bit different, but I feel like, I mean, buyers walk up and they've got their mask and they've got their gloves too, and they're more than happy to, you know, not touch any surface, walk around, and we've put some deals together since then. So, you know, it's just everybody navigating what's working for them.
Yeah. Well, I mean, look, you know, people are going to continue to buy houses. Again, it's probably
Yep.
going to be sometime in the first quarter of next year. You know,
I mean, look at you working from your home office. Home has never been more important, right?
it's the truth. I mean, and you need to like your home. You know, I mean, I'm
Yep.
lucky. I love where I live right now, and it's fantastic. And I thank God every day that, you know, I get to live in San Juan Capistrano, and
Yeah, you have a beautiful house.
beautiful bucolic hills around me. But you know, home is where your heart is, you know. I mean,
Yep.
it's not, so I don't view your home, your residence, you know, it is somewhat of a financial decision. For most people, it's maybe the biggest thing they ever buy, but it's more qualitative than that. It's where you're
100%. And you have to have a long-term goal too. I mean, if you hold on, like you're talking about your portfolio for a long amount of time, you're going to realize a profit. You can't think of it short-term.
yeah, it's, and also all the many things that you can't even quantify that you get out
Yep.
of the house that you really like. It's just, for me, I'm a home person, so it really is so important to me that when I come home at night, when I finally do get to go out again, you know,
Yep.
I really like where I come home, and that's where you take your deep breath, you know, when you walk in, and
Yep.
I'm so glad to be home. But well, when I finally get around to doing this, I'll give you a call and we'll see how
Yes. Oh, well, thank you. Well, I just so appreciate your time, and I want to thank you again, and you're the best, Kim, so I appreciate it. Thank you for your knowledge as always and supporting women.
Thank you for having me talk to you and letting me talk to you, ask you a few questions. And we have to do this again. As soon as we're in the next.
I know, I love it. Over drinks next time.
Yeah, we'll do one. We'll do a cocktail one.
Okay, good. Sounds good. Bye. Take care.
Bye.
Talk soon.
Thank you.
Bye.
Bye.
Bye.